Well, g'day all, Peter Clark here with an update on all things property from the month of October. Now, in recent months, we've taken a look at the property pricing, market movement, and had a focus on investors. But this month, rather than looking back at what has happened, we're going to try and unpack the federal budget as best we can and get an understanding for what impacts it may have on the property market going forward. Now, the budget is a big deal. Many are feeling the pinch and looking to the budget for answers. As we're all well aware, the official cash rate has risen from 0.1% to 2.6% since May, and CPI is up 6.1% for the year through to June, and expected to peak at 7.75% by the year's end. Energy and gas prices are soaring, and the budget is aiming to tackle the complex task of easing the cost of living without raising inflation. And they're primarily going to try and do this through the lowering of cost of childcare, medicines and the like. So all the talk seems to be about creating affordability in the market through an increase in supply and some incentives to assist gain market entry. Despite the property price crash headlines of recent months, data shows that yes, prices have dropped by 3.4% across the nation since March. However, from a regional perspective, they're still up by 47% since the pre-pandemic prices. Rent has also risen around 10% in the past 12 months. You see, it's a hard market to break into, and reports show that more than 160,000 people are on the waiting list for public housing, and a further 116,000 people are homeless. Supply and affordability are a big issue. And when it comes to housing, the budget is a long-term play. We're not seeing any cash handouts, no new home buyer schemes, there's nothing to provide immediate rental relief, and stamp duty remains unchanged. Federal Treasurer Jim Chalmers has pledged to bring the government, industry and investors together to build more affordable housing to tackle the housing crisis. They've launched the National Housing Accord, where they aim to build 1 million new homes over a 5-year period. But there are always a few catches. Due to labour and material shortages, this initiative won't begin until sometime in 2024. The Australian Financial Review's Robert Harley believes that 1 million new homes, or 200,000 per year, is no more than what the construction industry already does in a good year. Thankfully, the Accord is only one club in the budget bag. Labor has committed to their Help to Buy scheme, which they're aiming to have operational in early to mid-2023. The scheme will allow the government to co-purchase a property with you up to 40% for new homes and 30% for existing homes. Under the scheme, buyers will only need to repay the mortgage on their portion, and over time will either buy out the government or pay them out when the property sells. This scheme will be available to 10,000 people earning less than $90,000 per annum for an individual, or $120,000 per annum for a couple. And Labor has also continued its support of the previous government's home guarantee scheme, but have expanded the scheme to create their own regional first home buyer guarantee, which is now available. The scheme will also help 10,000 buyers to enter regional markets each year with a deposit as low as 5% and the government guaranteeing up to 15% of the purchase price. Some in the market believe this will further heighten the existing supply and demand issues in regional areas, making it even more competitive. And finally, Labor has expanded the eligibility for the Downsize superannuation contribution scheme. Now that's a mouthful, but under this scheme, older Australians looking to downsize their property are able to make a one-off post-tax contribution to their superannuation of up to $300,000 per person from the proceeds of their home sale. Previously, the eligibility was set to people 60 and over. It's now, however, available to people 55 and above. If you are looking to downsize, whilst the property market slows, trading in a big property for a smaller one and investing the funds into your super through the Downsizer scheme could be a great opportunity. Our team would be more than happy to discuss this with you and why now is a great time to move. So in summary, there is a lot to unpack. You could argue that with the National Housing Accord not turning any dirt until sometime in 2024, and the other schemes having either limited places or age or financial eligibility, that not a lot is really changing. You see, it's likely the most important link between you and housing to come from the budget will likely be found in some of the other pages not directly related to property, but instead related to general cost of living and to employment conditions. I look forward to coming back to you next month to update you on your regional property market and give you a little intel and data that you need to follow the market. Thank you again for watching, and until next time, we'll see you again soon.